Well, hello everyone. Hope everyone's enjoying their weekend and prepared for their 3-day weekend as well. Um, and this is my small account update for the week of, what was the week dates? From January 10th to January 14th. So last week I had about a 50% return on the position or on the account to where it got up to $1,000. So from 2,000 up to 3. I did take some losses as the market got a little dicey there. Lost about 50% of it, but still maintained $500 a profit and found some good setups. I'm able to recover the losses and then back above the highs. Closing the account, well, not really closing, but locking in anyways, because this accumulates or this counts as profits that have been locked in. Realized profits is the word I'm looking for. So anyways, up to almost about 1,500. I believe the account was up almost 72%, I believe. I'll have to look that up. But if you need the proof, here you go. Here is the small account I'm using. I started off with 2,000. Right now, the net liquidating value is about 3,400. And so far in the year, I'm up 1,500. And my current positions are in BABA, eBay, Procter & Gamble, and the Qs. But I'll cover those as I cover the trades whenever we go into the trading account. But there's proof if you need it. If I fail, it's for all of you to see. But yeah, right now, up about 75% on the small account 2 weeks into the month of January, or 2 weeks into the year of 2022, really. All right, so yeah, let's cover this. And now let's see how my details are looking. So as of right now, I would like to tighten this up. My winning trades versus losing trades are too close. So far, a total of 23 trades have been taken. I have won 12 and lost 11. So far, 3 consecutive winners and 5 consecutive losers. But the thing to focus in on right here is the profit factor. That is your risk reward. So basically, for every losing trade, or for every winning trade, I'm making close to 2 to 1 risk reward, basically is what it's saying. Or 2 to 1 reward to risk, really. But my largest gain so far has been 525. My largest loss is 268. So there you go. You can see how it's working. And so yeah, we'll see the trades that were done and go over the setups. Go to overview. And I'll check it out from the calendar standpoint. So just like that thing showed, I took some losses on Monday, lost a few small ones on Tuesday, and was finally able to make them back up Wednesday, Thursday, Friday. Closing the week net positive for, actually I should have done the math beforehand, but let me go ahead and knock that out so we all know what it was locked in for the week. So we'll go 515 plus 394 plus 116 minus 116. So that day's pretty much canceled out, and then minus 491. All right, so that brings the total for the week up to $418. And go ahead and get that out of the way. And if we're going to look at this from a percentage basis, if we count the locked-in profits of last week of being 1,000, bringing the account up to 3,000, so that $418 equates to 14% of the account on the week. And then if we go from 2,000 to 3,400. Oh, sorry, I'll go from 2,000 to about 3,418 that's locked in. The account is up, yeah, about 71% locked in profits anyways, not counting the net liquidating value of the trades I have. So 71% on the account in 2 weeks. Not too bad. Not at all. But be interesting to see where this is at where this is at by next week. I would like to get it above 100%, but only time will tell, right? I can completely screw it up, but we'll see. All right, so into the trades. All right, as I'm covering these, I'm only going to cover the ones that say closed, and the reason for that is because all these ones that say opened later into the week, as we move on through Tuesday, Wednesday, Thursday, they're going to say closed. That way we don't just keep on covering the same trade. So what I'm going to do is cover the closed ones, and then when I go to Tuesday, I'll just cover closed, because some of these ones that were opened were closed on the day, and it's the same thing, just a different day that it shows right here. But let's go ahead and dive in Disney. So I entered a bull put spread for $2.25. Not sure why it says closed. Oh, okay, yeah, I do. I do know. All right, so what ended up happening is I went bullish on this position. So we'll break it down fully. All right, so we have all these prints coming in right here, right? And I have them marked out on the day that they're coming in. The 4 and 8 EMA cross positive. It has reclaimed the 50. And then I was looking for it to go bullish, and I think that was on this day, actually, because I re-entered. This says reclaim the 50, so I re-entered the spread, so I took this trade twice. I just happened to put the picture on the wrong one. So anyways, I stopped out of this one on the day, and then when I re-entered it, this is what it looked like. As price was reclaiming the 50 going in, I got long again, but I'll cover that in the next one. Sorry about that. But that's a long story short. The point is I did get long, but price got back below the prints, so I took a small loss on this particular trade on the day. So small loss was as it got back below the print. So like it says right there, I lost $14 with the commission, or $15 with the commissions. So small loss there. And then whenever I re-enter it, I'll show you again because it is in here. All right, Square. This one I can admit I got in too early. And I think I was getting a little bit too rambunctious with the trades. I was kind of on a pretty good little hot streak, and I was on rapid fire, and I should have honestly slowed it down. Because typically, this white or red line right here, this trend line, is weekly support, as it says right here. And prints started coming in at that level. And typically, if I'm looking for a reversal, say weekly support holds, and it's going to at least retest the 50 or so, or maybe even the 21 EMA, I look for this blue and yellow line to cross positive. But you can see how volume's coming in right here as it's coming into this weekly support. I got a print, and price closed above it, and I was just looking for it to test the 8 EMA, just like it says right here, and to get some quick profits on a little retracement. Well, what ended up happening, and since these were very short data, I think these were 6 days expiration calls. I was looking for a quick pop. Well, if you look here from when I entered and exited, so entered here, looking for the pop to happen. The next day it gapped down, but obviously it recovered. But nonetheless, I stopped out down here. I didn't like how the days were short to expiration, and admittedly, like I said, I acknowledged that I jumped in too early, so I cut the loss. I was risking about 250. I lost 213. So I got the 160 calls for 88 cents, stopped out at 17. And this is why I accept max loss on the trades, because you never know what's going to happen. And hood, same concept. This one should have been, I was expecting more follow through on this, but that was not the case. Oh, hold on, don't want to edit it. I want to view it. So I did stop out. A 1.2 million share print came in at $5.15, closing on a hammer candle. A potential volume bottom. What a volume bottom looks like as price comes down, you see volume ramping up, and you get a reversal candle, which is the hammer candle. I can't say there'll be support here because hood's only been going down since it's been around now. And so yeah, I was looking for maybe a bounce. And then if you look right here, today's volume was 50 million when the average 30-day volume is 16. So I was like, all right, so maybe this is the bottom, and we'll get a quick pop. I was looking for it to retest up here, and just for quick profits, in and out. That didn't happen. I ended up stopping out because price broke down. So you see about the calls. It did spike up. I held on too long. I think this may just be the open, then obviously broke, and then it's kind of like a bear flag, and it sold down. Anyways, I was looking for price to go higher. Did not happen based off the prints. And small loss, $91 with commissions on the small account. Apple, once again, jumped in too quick on this. This one I was losing quite a bit. I was looking for a big bounce. I bought some calls for $3, which is a lot for the small account. I can admit that, but I was ready to pull the trigger on stopping out if I was wrong. So there was 7.2 million print at 172.41. It was looking like it was going to test this 34 EMA, potentially bounce up to the 8 EMA again, because it does kind of look like it has like it was a come bounce here, or I got the print and whatnot, bounce at least, maybe test 80 again. Obviously did not happen. More prints came in, and it got down to this level. It did recover, but I will show you that here in a moment. But yeah, small loss. I was risking 600, but only lost 150. So good risk management on that point. But if you look at it from here, it did bounce up a little bit, but now it kind of looks like a little head and shoulders. Prints did come in on Friday at a few million, I've noticed. So it looks like a head and shoulders maybe. And I'll gap down. But anyways, I was looking for the bounce. It gapped down, stopped out, did bounce higher, test this level. But anyways, I was expecting those prints to help push it up based off a technical pattern as well, and it failed. No biggie. So moving on. So that was Monday, where I lost with commissions and everything, 531. All right, let's go Tuesday. All right, CMC, okay, Comcast, I adjusted this. So I did alert the simpler trading community of this trade I was looking at. So apparently I didn't screenshot it, so that's why I did take a note in here to show y'all guys on the Thinkorswim. But basically, I have a good little quote that I follow since I've been following the prints and reading the tape that, and I didn't come with this from Jesse Livermore in his book, Reminiscence of Stock Operator, but he says it's okay to find yourself on the wrong side of the tape. It's just not okay to stay there. That being said, pull up. Okay, so Comcast. So what was initially what I was looking, I was getting short Comcast. So you can see it's below moving averages. It's below the 200. The trend is lower. Like you don't have to figure that out. And here's this red trend line that I drew here. And so every time it rallied up, it failed, rallied, failed, rallied, failed, rallied, failed. And as it was rallying up to here, I was looking for a fail again against the 50 SMA, looking for just a fall down to here in about 2 weeks. With the prints coming in over here, I was like, all right, maybe this will be a little drop. I thought this 9 mil block potentially could just been based off of dividends. But nonetheless, I took a small loss looking for it to go down. But whenever it started to break on this day, I was like, all right, I'm getting out. Took a small loss on it. Now, like I said, it's okay to find yourself on the wrong side. It's just not okay to stay there. I'm like, all right, so I am wrong on this trade. I took a small loss on that short. Now, I flipped and got long. I ended up entering a credit spread and some out of the money calls looking for it to go higher because now it's kind of like this cup and handle formation. It is breaking this trend line that is going lower, and it broke above the 50. So I ended up entering a spread and bought the calls to go higher. But there's a little caveat. The market is really finicky right now, right? And I didn't like how we're below almost 10 million prints on the SPY. And if the stock if the market goes down, it's going to take everything with it. So if you've been in the simpler chat rooms lately, I saw Roggy talking about it. I heard Sam talking about it. Everyone is referencing like the tide or the market like the ocean, and then what you're trading like the boat. And so the point is, the way I always view it is a rising tide lifts all boats, and a lowering tide sinks all boats. So a boat being the stock, and then the ocean or tide being the market. So if the market goes down, doesn't matter the technical setup here, this is going to go with it. So that being said, the point is I cut my longs on Thursday. Yeah, it was on Thursday I cut my longs. Even though this technical setup was looking good, I cut my longs because I thought the market was going to gap down, which it actually did based off of those prints. But I'll cover that here later. But the point is here is I cut my longs on the setup, so therefore it didn't work out. But that was a technical pattern. So I thought I was going to go short. I was wrong, closed it, then went long, and then ended up having to cut it just because I didn't think the market was going to participate. So yes, all in all, after doing all that, I was I had a $169 loss, 170 when I was risking 200. And I know that was a really long-winded explanation, but I hope that helps because I know it's a lot of people asking questions about that. You need the market to participate with your trades. All right, opened. Cover those. Roblox. I don't even know why I trade that thing. That thing is always slicing and dicing me up. All right, so CMP. All right, so if everyone's familiar with the squeeze. If we look here, it's in a mid-compression squeeze, going light blue, stacked DMAs, and I'll click on these and make them big here in a minute. So anyways, this is looking higher, right? I'll zoom in for you. So prints came in at 800,000 and 777,000 at these levels. Like it says right here, stacked DMAs, all moving averages stacked positive. It looks like a little bull flag pattern, right? Like it wants to break out. And here's the volume coming in. All right. If you know how to do the squeeze, this is how you could use the volume with the squeeze. So I have volume coming in from the big guys. The squeeze is turning, it went from dark blue to light blue, indicating, so you see how it goes light blue, then higher, light blue, then higher. So I was like, all right, this looks like it wants to go higher. This is a slow moving stock, but I did buy the February's. Let's go ahead and take a look. Yeah, February 27 calls. I bought 2 of them, expecting it to go higher, but what ended up happening, it gapped down below the prints. And if I get below the prints, and then the 4 and the 8 EMA ended up crossing negative. Okay, so if I was to show it here, it's going to look different today, obviously, because a few days have gone by. But now it looks like it wants to go higher, right? This squeeze may fire long and it get going. If you look at it now, you have a really big bullish engulfing candle here, a hammer candle right here. So it's buyers came back in off these levels and buying it up. But anyways, at the time of stopping out, because now it looks great for a bull setup, but at the time of stopping out, which was, see, I entered on this candle where the 8 and 4 EMAs were cross positive. On this candle, it was closing below the prints, below the 8 EMA at the 34. So that was telling me that's my exit signal. For these quick profits, that's what I'm doing. And I'm kind of quick on the trigger to stop out based off of how quick the market could change its mind. So now it looks great. If it gets back above the prints, I'll continue taking it long again because the volume's still below us there and the squeeze is still valid. Like that doesn't change. Okay, so let me get this out of the way. All right, so small loss there, only lost $92 with commissions. And I already covered CMCA, how I cut my longs, Peltier. All right, this one I took it down and then I took it up. And where's my screenshot? All right, so, well then, this is what happened on Peltier. I'll show you on here. So I know what I did. So I took it short not that long ago, and this is one way you could take it higher. So all these prints were coming in right here on this low base. I took it short as it broke this level and took it down. Great. As it came down, these big prints started coming in. There's a 6.5 mil print, which is 19% of the average volume at the $16 level. I caught the pop up to the AEMA, and I got out. I got the out of the money 17 calls, I believe. I'll have to see what's going on with this. Why isn't there a screenshot? So bull put spread, bull put spread, bull put spread, and scaling out. Huh. I don't know why it didn't do it. But anyways, yeah, so I entered it. I didn't get the calls. I got out of the money spread because it's IV's high. And so anyways, you can see here on the 30-minute chart how I got in here, got out here, and I'm not 100% sure what the return was on that one. Let me go ahead and we can do the math real fast. Pretty sure I scaled out at 50%. See if I sold it for $1.44, and I hedged it with for 0.39. Oh, that's right, because it's $1 wide, and I got it for $1.05 credit. So how do you evaluate this? So you look at this. So this is $2 wide, right? You get this, you subtract it, or subtract the 39 into 34, and that equals 1.05 of credit. So $2 wide spread, you got $1.05 credit, which is half of, it's a little more than half of the $2 spread, right? So therefore I have a potential of 100% return on this trade if it goes my direction. Okay, I don't like how Tastyworks does this. It clumps your fills separately, but because it makes the work a little bit harder. All right, so this says got two, boom. All right, well, I'll just do the last one. What did I end up closing the last position for? That way I don't keep you you guys sitting here just watching me do the math. So then I ended up closing it for 80 cents. So a small winner there. I feel like I'm missing something on this. I don't like how they do that. Anyways, that was the setup. And I made 160 on it. I have to go back and evaluate that. And then Uber. Market was looking weak, cutting longs, just like I have it typed right there, but this was the setup. All right, so large orders have been coming in on Uber. See this white trend line right here? It goes down, slices through all of this. You see how it broke out, came down, retesting the trend line and the 50 SMA with lots of prints coming in between this area. I entered a $2 wide spread, credit spread for almost $1. Looking for a price to go up and just stay above 44 for, I think, 2 weeks. Let's see. So I entered the January 21st, and it's 10, so yeah, about 2 weeks. Like it says, I started cutting longs because the market was looking weak. And here's the setup. Got in right here, scaled out, and then closed longs. Small winner as well, only 152, but they're adding up and pushing the account higher. All right, that was Wednesday. On to Thursday. All right, I already talked about Comcast, Beyond. Hit my target 50, hit my 50 SMA, close the position. Okay, don't know where my screenshot went again, but I can cover that right here. No big deal. All right, so here's this trend line going down. It broke above the trend line. Here's weekly support, prints coming in, and you can see the entire time price wasn't really closing below these print levels. And the 4 and 8 EMA crossed positive. And all I was looking for was price to test the 50 SMA. And that's exactly what happened. Is it trickled sideways and tapped it. And as it was tapping it, I got out. We could look at my actual execution. I remember watching it. And I was like, should I hold it? Should I not? I was like, no, it's hitting my target. Get out. And we could pull up the 5-minute chart. And here it shows my exit right as it's hitting about 74-ish. And so, yeah, got out near the top. And this position was a 70-65 bull put spread. And I believe, yeah, I got a little bit more than half, so I can make 100% return on it. Ended up making a 336, and I know my risk was 250. I'll fix that, and bam. Let's see here. See what happened. How much? It says I got out for 60%, so I sold it for 633. Subtract 3.28. Okay, yeah, so $5 wide, and I got $3 for it. And I ended up closing it for 60%. I won't sit there and do the math, but solid return on it. And it hit the target, and I got out. And like I said, I apologize about all that. Usually, I'm better at having all my stuff in there. All right, covered Uber. Covered Disney. How I stopped out as the market was turning around. This one, so it was looking bullish. And I stopped out as the market was looking weak on this bullish engulfing candle. I got out right before the drop. And there was also a 900,000 share print right at 158. And we got right below it. So I was like, nope, I'm out. A big seller came in for almost 1 million shares. That was almost $158 million. I don't have the money to compete with that, especially not a small account. But hopped out of that trade as the market was looking weak and all that. And BABA, this one I have a little bit more to talk about. So this is a nice overnight trade. I believe I made about 73% overnight on it. So this is what I was looking at. This is a weekly trend line, this red one. See, it's the week chart. The 8 and 4 EMA cross positive. Prints coming in. It looks like it wants to turn around, right? It wants to break this lower, trending lower type of trend. And then I pulled up the stats on if there's more calls or puts. Look at the difference. There's a total of 237,000 options being traded. Only 43,000 are puts, and then almost like the ratio, there is 4.5 calls to 1 put. That is the ratio. So that was telling me that there are a lot of call buyers too. And I was watching the 3 days till expiration trade, 220 calls. And I don't watch the option chain too much, but it caught my eye so much. I just saw volume racking higher and higher and higher. Like the volume just kept going higher and higher, and I was like, that's kind of weird. And I looked it up. I don't have a screenshot of it, but it equating to be $4.3 million being put into those calls. I was like, that's weird. That's a lot of money to put in for 3 days of risk. So basically what ended up happening is the next day, news came out that China's going to start purchasing the 737 MAX airlines again. So basically what's happening is someone knew that information. They were buying calls based off that information, expecting it to jump higher. And that's exactly what happened. I entered right here, popped up to the 200 SMA, which was my target. And I got out. Made 173%. So the way to look at it is I did enter a spread because I didn't like how the 200 SMA was above. And I thought it was going to move sideways or down. And you don't ever know how quick it's going to move. So I did do a spread to help manage it some. But you see there that I sold the 220 puts. And then I bought the 215 puts. And ended up closing overnight So I can just do this for you. Let's see, pull it here. This would be better for you to see, make more sense. So you see I entered the spread for $2.30 and overnight closed it for 47. So I got to keep all that credit. All right, so that was a solid trade. There's Boeing. Roblox burned me again. As the market rolled over, it took it with you. So if I was to look at this even without prints, I could look at this and be like, all right, price came down, hit the 200 SMA. We got a reversal candle of support. On volume, continuing higher, this looks like this wants to go higher. So I believe I entered a spread. Yep, okay, I bought the 190s and sold the 195s. This is a call debit spread, looking for it to go higher, and then that most definitely did not happen. So you see up here, it even looks like it wants to go higher. Like, boom, we're flagging, get ready to go. I'm like, all right, let's ride this thing. The market disagreed with everybody and pushed it back down, and I stopped out. Now, I'll apologize for the length of this video. I know this is a long one because I did do a lot of jumping in and out as the market has been a little dicey. And here, and then finally Friday. Get this out of the way here. I'll cover the ones I closed and I'll cover the positions I'm in. So DLTR, I got 3 positions here. I closed 2 for 100% and the last one for 168%. I won't bother with the math right here for you, but I'll just go over the setup. So the setup. So this was looking good. Everyone was wanting to go bullish on this setup. And don't get me wrong, from a squeeze perspective, it was looking solid. But on Thursday, I saw a 1.2 million print go across at this price. I drew this trend line. The EMA is across negative. And it looked like it wanted lower prices. And I was targeting 130. Now, I didn't expect it to happen so fast. And it did. It just happened overnight. So to me, I have a large print. That's abnormal. You don't really get Dollar Tree prints. So that was the first indication. Well, that's weird. And then if you look over here, 1.2 million is pretty large compared to the average 30-day volume. And we closed below those prints. So that was making me think, all right, that's a seller. I'm going to go short. So I shorted Dollar Tree. And what ended up happening is a solid gap down. So there was a seller. I entered here. Scaled out 100% on 2 positions on the open. As we got below towards my target, and I was like, all right, I'm not going to be greedy on this. I closed it for the 160, whatever it was, and then got out, and then you see it recovered. So that was a quick way to profit overnight for some quick returns. And now what trades am I in? I could cover these real fast so you get an idea of how I'm doing things. This one, I didn't realize earnings was so close, so I did mess up on this, and I didn't want to close it the day I entered because my account is under the pattern day trading rule, and I didn't want to get flagged and maybe get the count, so I'll just hold it. And so basically what I'm getting at is Procter & Gamble. The staples have been kind of strong right now, so there's a 1.5 million print at 158.29. It's consolidating on the support, and this candle is above the prior 2 days candle. So it looks like it's right here, head fake down, and it looks like buying because we're closing above the candle or above the print. We're above the prior day's candle. So it looks like it wants to go higher. So I was looking for it to go higher and no telling how quickly it's going to move there. But the issue is earnings. And so therefore, since I'm in a spread, it's going to hold on to that premium in the spread until after earnings. So what I have to do now is I need it to move a little bit in my favor, and then I'm just going to cut it for at least break even and move on. I should have caught that, but I did not. So This one, I didn't realize it. There's a mistake made on my end, and I'll cut it. BABA. I have the 140 calls that I bought for 177. There was a pretty large, like it says right here. This is what it looks like to me. So I have the prints. There's 1.7 million print at 130, and it's mixed in here. I know you can't see that, but that's just know that's there. I'm targeting 140. I shaded these areas because it's tested weekly support twice. It hit, bounced, bounced. So now the question is it going to come up? It did get above the 50, but then the market got weak. It's a little finicky. Moved it down. I'm like, all right. If the market does indeed bounce next week, which I don't know if it will or not, but if it does, then this will push higher, and I'm targeting at least maybe 140 based off the prints if it does recover. But the main setup here is it's bouncing off weekly support, and then this other white line that's right here that you see go across, that is also weekly support or resistance. It got above it, and it's testing it today. So it's Friday that I entered. It's testing AEMA, testing weekly resistance, but the point is it broke above resistance and now it's testing it. Typically you want to wait for confirmation to go higher, but the reason I entered early is because of this 1.7 million print and then this weekly chart pattern. So we'll see. Could be wrong. But it looks like it wants to turn around to me. So that's BABA and the Qs. This so volume has obviously been coming in. It's testing this trend line, closed at the highs. I think it wants to retest AEMA at least. And depending what the bonds do, this may go a little higher. So anyways, just in a Monday, looking for a test of the AEMA. Could be right, could be wrong. We will see. But that is a spread. I'm just looking for it to go up and test 84, and I'll scale it along the way if we do indeed bounce. The Darkpool prints for the Qs on Friday, I didn't see any. I don't believe. I have to go look. But I think we closed above them, so that's why I was expecting a bounce. I'm not saying the trend has changed, but maybe a small bounce. But that is it for the weekly review of the small account. If you have any questions, please feel free to ask in the comments section below. I answer all of them. If you're in the simpler community, catch me in the training room and ask questions there. I'd be happy to answer them live. Also, if you like this little TraderVue, there is a link in the link tree and description box where you can try it out for a month, I believe. And check it out. There's a link in there for something. With TraderVue, I put all my trades into this system. And so, yeah. If you wanting to check out the Simple community, there you can try it out for a week for $7. I think it's very much worth the investment. And yeah, so that's it. Sorry for the long video. Enjoy your 3-day weekend, and take care. I'll see y'all guys on Tuesday. 3-day weekend, Tuesday, if you're in the simpler room. If not, just wait for the next video next weekend. All right, take care, everybody.